session. And I hope you all had a wonderful lunch. So I am Andrew Boamah Asare, infrastructure specialist from the Embassy of Switzerland in Ghana. And today, in this session, we will be discussing the promise of trade integration for developing countries and what it means for our prosperity. So I have with me these wonderful speakers, and I'll allow each one to introduce themselves. So I'll start off with Miriam.
Good afternoon. I'm Dr. Miriam Omolo from the African Policy Research Institute in Nairobi, Kenya. Thank you.
Good afternoon. I am Munsu Kang from Korea Institute for International Economic Policy in Kiev. Nice to meet you. Thank you.
Very nice to meet you. My name is Toshimichi Hasegawa. I'm working for Japan Bank for International Cooperation. It's a public financial institution. It's a Japanese bank, but I'm currently based in Paris.
Okay. So yes, I think this session is very important, looking at global value chains and international trade for developing countries. We all know what this means for developing countries if we are able to develop our systems and be able to trade on the international market. And we all know how developing countries have struggled to break into the global value chain. I think we've always been part of the global trade. We just own a very small percentage of the whole value chain. And at the backdrop of increasing resistance to globalization and also having all these issues when it comes to the pandemic and also now this food and energy crisis, there has been now a momentum to shift it to looking at within your borders, within your region, how you can find more sustainable ways to supply your citizens with what they need. So to kickstart off the session, I think I'll go to Miriam. I'll come to you with the first questions. In your sense, what are the perils and promises of regional integration, and how can better integrated countries and continents compete in the global supply chain marketplace?
Thank you very much. I'm going to answer this question trade area. The agreement that has been signed and ratified by several countries, negotiations are already going on. So I think the first thing, if you look at the AFCFTA, as I'll call it, it has a market of 1.3 billion people. That is a very big market within Africa, with a GDP of 3.4 trillion. So how will this help us move into the global value chains? I think as African countries, if now I'm looking at the good or the positives about it, the first thing is that we have a market we can trade in within ourselves as a step towards the global value chain. Already we are joining these markets, not as just as separate African countries, 55 to be more precise, but regional economic blocks or regional economic communities. There are several East African communities, there is COMESA, there is SADC, ECOWAS, ECAS, there are a number. We are starting from a point of not reinventing the wheel, but building on the systems we have. So I think that is a good thing. We are not going to talk about value chains if we don't even have systems at all. There are already different agreements that have already been signed. There are protocols, goods and services. There are protocols that are being negotiated or will be negotiated, competition policy, intellectual property. There is one that will even ensure inclusion because it's on the women and the youth. That is a very good starting point. So we have an architecture of systems, which is very important. And within it, there are discussions of digital marketplaces or information that is supposed to be integrated. There is supposed to be infrastructure that is being developed. Standards and regulations are also very important, which are being already issues of discussion. How do we harmonize our tariffs? Those are offers, there are tariff offers already in place. Different committees are already having discussions and negotiations are going on. So that is a very good starting point. Because you put your systems in place, you have a very good starting point. doesn't mean there are perils. It doesn't mean there are no perils. We have talked about, if you follow the negotiations and the development going on, who is financing these systems? And just a good example, if you ever watch these mafia movies, when they want to catch the mafia boss, they go to the bookkeeper, because you'll know where the money goes. Where is our money going? Is it into these systems? Who is financing it? Most of it is financed by development partners. And as we've had discussions previously, yesterday, as long as you've not financed these projects from our public exchequers, we are not going to succeed. That is the first thing. The second thing which is key, and I know we are going to still have some discussions on this, trust. When we are talking global value chains, and we've had these discussions before, you go to countries that are neighbors, they have similar ecological zones, so they will be producing similar commodities. When you talk of cocoa, Cote d'Ivoire, Ghana. When you talk of maize, Kenya produces maize, Tanzania produces maize, Uganda has some maize. If we are to put a factory, will we have the factory in Kenya or Tanzania, or will it be in Cote d'Ivoire or in Ghana? What trade-offs must we have? Because it looks like at that point we start looking at inwardly as nationalist, not regional integration. This has to be well defined, and I would like to really understand the experiences of other countries that have made it, just as a starting point. Thank you.
Thank you. I think there's more that we can delve in when it comes to the area of trust. We've seen some border issues between Ghana and Nigeria when it came to protectionism and also trying to ensure that their citizens have the first market to their, for example, rice production was an issue for Ghana and Nigeria at the borders. But maybe moving away from that, I would like to come to you, Toshi, on the hard and soft infrastructure that is needed to ensure that this regional integration in terms of trade happens. And I mean, also from your background of finance, how can we finance these infrastructures?
Thank you so much for your proposal, and it's very much my honor to be here to talk about these huge topics to be discussed today. Yet the hard and soft infrastructure. Yes, as Miriam said, that what is the challenge for African countries when we talk about the global value chains? It's not the openness of African countries to the world, but the segmentation, division, segregation of the each domestic market to each other. For example, Nigeria is producing quite a lot of rice, but his neighboring country, Ghana, is importing a lot of rice from Thailand, outside of Africa. Taking an example of the cacao, Ghana and Cote d'Ivoire, these two are exporting the same cacao to the European countries. But the market value chain is, yes, each of the African countries relating to European or outside countries, but the relation, market relation between neighboring countries is very not developed. That is, I think, one of the most challenging issues to be solved to facilitate or integrate or develop the regional integration of the African markets. So, yes, let's take an example of rice produced in Nigeria. Yes, at this moment, the government of Nigeria is controlling or stopping the exporting rice to prioritize their domestic consumption. But in your future, in region level, that it be economically reasonable that Nigeria exports their rice to neighboring countries, like Benin or Ghana, rather than import from Thailand? How to facilitate such inter-regional, well, within intra-regional trade among the African countries? That is a question for infrastructure. Yes, obviously for hardware infrastructure, we need to secure the road and transportation. Also, for software infrastructure, we need to harmonize the tariff system, or as we discussed in previous session, how to send the money, how to finalize the transaction for the import-export. There are much things to do, but what it's really need is the suppliers of each domestic market do not understand. They are not aware of the existence of the neighboring market in neighboring countries. For example, Nigerian farmers who produce rice, but they do not envisage export its rice to neighboring countries. I think in long-term future, such entrepreneurs, we talked about the demand-driven market, but finally, it's supplier who drives the such demand-driven, who can discover the existence of potential demand of neighboring markets. So I think it's a key factor for future integration of the African regional markets.
So yes, I think I like the point you make about how Nigeria produces a lot of rice, but its neighboring country, Ghana, also consumes a lot of rice, but then they don't supply to Ghana. And I mean, I think for me, coming from Ghana, I see that the issue really here is about also knowing what your neighboring country needs. So there's a gap in terms of data, and that can be classified as a soft infrastructure. But I think the second part of the question, when it comes to the financing of these infrastructures, is this something that should be left to the private sector, or is the government supposed to be involved in this? Yes.
Yes. During these 2-3 days of this dialogue, we have talked a lot about the new technology, new innovative financial solutions. But I confess that I'm coming from something. I'm coming from the world or the area which is very traditional, conservative lending scheme country, lending to business. That means that, for transportation infrastructure, for example, I think it's mainly public sector side who should finance such very basic infrastructure for all of the industry. Then how to finance it? It's normally traditionally it's sovereign finance, public financing. Yes, and on top of that, we have talked about the role of public financial institutions, including MDBs. Today, the public financial institution cannot afford secure all the funding to be needed for infrastructure development. The role of the public financial institutions, MDBs, is mobilize the private financing. Mobilizing private financing is very requisite. But when we talk about mobilize, what is mobilize? How mobilize private financing? Someone talked about the de-risking, provide guarantee, blending finance. Everything is very convincing, and everything is necessary, I think. Yes, in terms of GVC, in our case, it is co-financing with private commercial banks. That means all the transactions approved by GVC is obliged to be co-financed with commercial banks, commercial financial institutions. In that case, commercial banks, commercial financial institutions should also share the risk of the borrower. So, for example, now JBIC is ready to take a risk of sovereign government of Rwanda. But if in case we finalize a transaction with Rwanda, we need to find some commercial financer, commercial banks who can also share the risk of government of Rwanda. If the risk analysis from the side of the commercial banks, I think it's always still quite a traditional one. Globally saying, you have two methods of risk analysis: forward-looking risk analysis and backwarding risk analysis. Forward-looking analysis is analyze the business plan and judge where this investment can be paid back. And the backwarding risk analysis, it means the track record finally. So track record is very important. Even today, most of the commercial banks are heavily dependent on the track record as a basis of their judgment for financing. So track record is very important for traditional finance. I'm sorry not to present something special, but I think it's a reality.
No, I think what you said is very relevant, and I think we've mentioned it in other sessions how there has to be also some sort of capacity building on the Western side as to how to see projects here and how to de-risk the projects so that funding is easily made accessible. Yeah, I think this topic maybe we can discuss further, but I would like to go to Musu. Coming from South Korea, a country that used to be developing and now developed, you have major tech companies, Samsung, also major automation companies, car manufacturing companies, Hyundai, which are all international now. How has, coming into the international trade scene assisted, or how did that assist South Korea to become prosperous? And in that sense, I'm trying to understand, is being able to break onto the international trade market and the global value chains for developing countries, is that the answer to our prosperity goals? Yeah.
Thank you for the question. Using the Korean experiences, I cannot say the whole history because it's starting from the 1960s. But let me briefly explain about how Samsung and Hyundai or Kia, those big companies, has been grown. First of all, the context was different because it was like 1960s, 70s, so it was possible to protect the domestic market. So what I mean is when one company is growing up and if we want to see some products from those companies, the government needs to protect up to a certain point. So this was one point how the Korean companies has been grown up. And another point is about the downstream development, because we didn't only assemble like cell phone or automobile cars and then export it. Korean government also promoted to install the SMEs to manufacture the auto parts and other parts as a downstream development. So this was kind of one experiences of Korea. But another point I want to say is participating in the regional value chain. When we were developed like 30 years ago, 40 years ago, our major export or import country was Japan, and we were very dependent on Japan. But as the times flies, our dependence was increased to China, and it means like Korean government tried to export and import with their neighboring countries like China and Japan. And nowadays, it expands to ASEAN countries like Vietnam. So there's one case, Vietnam. Samsung has constructed its product plants in Vietnam, and it can be one of the regional value chain. And finally, there was very huge economic growth in Vietnam, and also Samsung has produced its products in the relatively low prices. So this can be one experience from how also some mechanisms.
I think that's very, I think I actually got a few interesting points from that, and, you know, leveraging on your position in the region that you were, and targeting major populated countries like Japan, China, and trying to find what they need. But I wanted to follow up, maybe just before I come to Mary, I wanted to follow up how that that strategy was developed. Was it based on having the data on what your neighboring countries had? How did you ask, or how it was a different context back then, and, you know, government also stepping in at some point? So how was this done?
Actually, at that time, there was no data. There was only people entering to Japan and China and to study the market themselves. So, but the government have promoted to export and also gave them some advantage for the exporting companies. So I think this was one attractiveness why Korean companies try to move to abroad. And fortunately, Japan and China, even though we are competing each other, there are some cultural similarities, and we know what they want at least, so we know the minimum of the demand. So this is why the Korean government, it was very easy for them to enter the Japanese market first and then to enter the Chinese market.
Sorry, Mary. Yes.
Yes, just to add on this question of how do we join these global supply chains. The question is about competing, but I would like to say complement. Because as neighbors, if we compete, I don't know whether it's healthy. The first thing, if you look at the African trade statistics, and I'm talking about agriculture, which that's what we've been exporting. Intra-Africa exports, as a percentage of total exports by Africa, is less than 4%. So we need to start trading amongst ourselves. We are not going to trade if we don't have market information systems that are integrated. So why can't we just look at our national market information systems and move them to the region? You can even move them to East African Community, which then moves them to the Secretariat, the African Continental Free Trade Area Secretariat, where that can be organized. We can talk about regional agricultural and industrial hubs so that we have some integrated market systems in agriculture within the region. And then how do we develop that into industrial hubs so that you produce and manufacture or process it there, or agree within a region, how does this work? I think that's a very important area. We are not going to participate in the value chains if we don't have strong intellectual property systems. That's another thing. Most institutions, most countries have intellectual property institutions, but they're very weak. We have to strengthen them. And back to what we discussed, finance them ourselves. Thank you.
Thank you. So at this point, I would like to open up the floor to our audience. If there's anyone that would like to also share their opinion on this, or if you have any questions, you can, yes. So I have one, Andy.
Thank you very much. Good afternoon. I'm Emmanuel from Ghana, and my question goes to Miriam. You've talked a lot about AFTA and what it can do to improve trade among the African countries. I mean, right now AFTA is operating, but I'm not feeling the impact. I don't know whether something has even changed. And I'm sure if you ask many Africans, what has changed and how can it be accelerated so that we can really feel, I mean, if you look at the European Union, for example, when one of the key things, one of the main reasons they set it up was to improve trade and also the movement of people. And even now, if you go to Ghana, if you are traveling from Ghana to Togo, it's so difficult. You get a lot of stops on the way. The border is, you know, you have to even pay bribes and all that. So it's still, I see it as a caricature of something. It represents something, but it's not working, you know. So how can we really make it work and not a white elephant? Thank you.
I don't know if there's any more questions. Okay, Miriam, then you can.
All right. Okay. First of all, the Secretariat is relatively new. I know the Secretary General is not more than 3 years old. So it is, they still, I'm not speaking on their behalf, but first of all, this agreement, the African Continental Free Trade Area, is not known. There's little level of awareness among even the officials. So raising the level of awareness of what it portends, what does it entail, how will we gain from it, is the first point. That is the first starting point. How will we gain from it? And then secondly, those problems, the connectivities, cross-border issues, most countries still have them. As long as we don't sort them out at national level, or between countries, or even within the RECs, ECOWAS, we will not solve them at the regional level. So that is where it has to start. It goes back to what I talked about, trust, and just willingness. Because if you go, all those documents are there with what needs to be done. We have, example, the STR, trading regime, where if you have goods that are worth less than 2,000 USD, you should not pay. But if you look at cross-border traders, they have to bribe, not knowing that they don't have to pay for some of these goods. So unless we have political commitment and raise awareness and political buy-in, to me, I think that is the first starting point. I know the African Union has a very elaborate connectivity network, where there's a road that should connect from Cape Town to Cairo and across East to West Africa Central. Those plans are good. It will help us with connectivity, because I think right now, if you want to leave Kenya, example, to go to Ouagadougou, I think you're better off taking SN Brussels to Brussels than Ouagadougou, than even crossing over with Ethiopians in terms of costs. So those are some of the things we need to deal with, but we have to also work at national level. Improve our own national systems, the cost of doing business. If we don't deal with them nationally, we'll not solve them regionally. Our unit starts with our nations. Thank you.
Can I?
Thank you. Yes.
Because I was studying about the South Africa and even Northern Africa, what I found is that there's already regional value chain within North African countries and Southern Africa countries, such as like automobile and high-tech industry. So actually, South Africa is leading in the Southern Africa, but like if you look at the automobile companies in South Africa, those companies, especially these days for the electric vehicle, they are importing natural resources from neighboring countries such as like Zambia and DRC like that, and they are manufacturing in Namibia. So this can be one of the regional value chains. So we cannot say AFC, FTA is not working, but there's working in the regional level. I think so.
Okay, thank you.
Thank you. I'm Olga Shebelyanskaya, head of Unicity. I have a question to all the panelists. So, in all your respective work, you have demonstrated the value of cross-border commercial exchanges and how this helped certain countries move ahead in terms of economic growth. But now, when COVID hit us, then we saw a totally different reality. We saw that, for example, I'm based in France, and in France we just didn't have face masks, so now suddenly no one wants to supply because people are short in their own country, and that can go forward and forward to other goods. So the question that I have in my mind is, how should countries behave today? Should they still look into trusting each other and then leaving aside some parts of production which they may need and then rely on, in case of emergency, on other countries? Or should we maybe on the contrary strengthen our national production now to make sure that in case of another emergency that we will be more stable? Could you please shed light on that? Thank you.
Thank you. Okay, I don't know.
Okay, if I may, yes. I think it's a very important and very interesting question to consider. And yes, you talked about the masks and the vaccine after the COVID. Yes, I think that it's not the time to produce a vaccine for COVID-19, but I think it's better to prepare ourselves to another version of a pandemic. So I think that what is important is, very similar to the stable food. The very basic medical equipment and medicine is very important to be produced within region. So it is requisite to establish a production capacity within region, not limited to the COVID vaccine, but the more in general basic medicine or basic equipment should be produced for the future another version of a pandemic. Yes, I had a chance to talk with one of French pharmaceutical company, and I asked them, which country is a candidate for such local production for the equipment and the equipment or medicine. Yeah, they said it's complicated. There are many challenges or some elements which hinders their decision making to implant their production site in a region country. First one is the complicated process of approval of such medicine or equipment, and on top of that, they said that each of African countries relatively small as a market size. So I don't know exactly what numbers of population should be required to exercise the economy of scale. It maybe depends on the products and it depends on the equipment. That most of the African countries, first, they have its own national authorization process. It leads to the complexity of the approval, and the market size is not so big enough to attract the motivation from the side of investment from private company. So I do not have a concrete idea, but it should be better to have some initiative to consolidate such divided, segmented markets. Probably why not to? Yeah, I think it's a common purchasing of share or mutual approval process, or I don't know cooperative preparation among neighboring countries. Some initiative for consolidation of the segmented market will be a next step to be done for the future as a preparation against the future pandemic.
Yes, I think that was a very important question, and I think during the pandemic, when that issue arose, one of the questions I was asking myself is, why has a certain country been empowered only been empowered to be able to produce certain vaccines or certain masks. And I mean, it goes a long way to talk about the global financial architecture, where it looks like investments are always going to certain countries for certain investments to happen. I mean, we have a lot of labor force across Africa. Most of these vaccines, masks could have been produced. In fact, Africans produced their own masks during the pandemic. But you ask yourself whether there was any initiative to get this on an industrial scale to be able to supply to other markets. So it's important that, yes, you build reserves in country, but I also think that for a lot of developed countries, it's also important to be able to establish different supply chains across the continent and not just one continent, you know. And I think that's something that goes to talk about the first question: how can maybe developed countries assist in improving the global value chains for the even developing countries? So I would say it's now steering investment towards areas that have never been explored. So I don't know if, Miriam, you have what to add on this. Yeah.
A very interesting question. In my opinion, when it comes to, I think, global value chains, regional trade, and within the context of COVID, the pandemic, we must have a trade-off. National sovereignty on one end of the spectrum and regional integration on the other. Because if we don't do it, and I'll pick the example of East African community within the context of COVID, whether it started in Kenya or Tanzania or Uganda, it's not clear. But what I know is that as long as there's a pandemic in Uganda, within a week, if not dealt with, it will be in Nairobi. It will be in Dar es Salaam. So we must have that trade-off and look at ourselves as a wider border. There are issues of national interest we will look at, but when it comes to what affects the region, we must trade off that sovereignty, and some of them must be issue-specific. Within that context, that's the only way we are going to join the global supply chains. We have to trade amongst ourselves. And just as you said, yes, we have to trade amongst ourselves as a starting point. To develop them, then step to the global value chains. So move to regional value chains, then go to the global value chains. Thank you.
Yes, you want to follow up? Okay.
Thank you very much for these really, really valuable insights. I just want to state this problem in a bit of a bigger way. COVID is just one example of what happened. Now, with the exacerbation of relationships with Russia, what we are seeing is that the West is really worried about how they're going to survive in winter. Russia, maybe on short term, is less worried, but a lot of equipment, technical equipment, it depends on the West, which is not going to receive. So my observation is that while before we were going towards a more globalized economy, now we kind of retract ourselves and we wonder how we can survive on our own, which is not very healthy either, because this exchange of goods used to really help countries optimize where they are the strongest, and then everyone to grow. But this now, my observation is that this movement is getting reversed, and I'm not really sure what is the best way out. Should we still learn to trust each other somehow, as you were saying, at least at regional level? Because, for example, now Germany is really depending on Russian gas. France has nuclear power for electricity. So the EU is discussing about France supplying some power to Germany in winter. But I'm sure French people will go on strike, as they usually do. Now it's every Saturday for the last 3 years. So people, when it comes to basic needs, people are not as open as they may be in more calmer contexts. So what to do in this respect?
I want to react to that, but let's get more questions. Okay, you and then Kwame, yes.
I would like to ask the moderator the question. You just mentioned that the problem with vaccine manufacturing in Africa is because of the lack of funding, and then it goes elsewhere. But my understanding is that first, countries in Africa have to do what they can do, policy regulations. Yesterday I was speaking and I was sharing insights from the Indian pharmaceutical industry where they say that countries in Africa invite them to set up manufacturing, yet they have such stringent regulatory mechanisms, they take 3 years for that, 4 years. So what are the countries doing themselves to facilitate others coming in and setting? Second, there is tariff import duties on things which are coming in for the manufacturing facility. Forget the skilling and the labor force. I mean, Africans are very bright. They can definitely, I mean, there are so many countries like, of course, JICA, India, multilateral forums. Everybody's willing to do the capacity building. And ma'am, you mentioned about the political will. We've been hearing about this political will forever, you know. So what does the civil society, how do you get back this political will into action? I mean, when will it happen and how does it happen? Otherwise, all our life 2030 agenda, we can keep talking of political will.
Yes, thank you for your question. Maybe Kwame.
All right, thanks for the interesting conversation. Now, I'm just going to make a comment and then I'll ask each of our panelists to respond if you, as you see fit. You know, the COVID-19 pandemic is considered even by the WHO once in a century global shock. And it's important for us to read, therefore, the fact that it's a very rare event of that kind and that scale. But what I fear is many countries, or some of the arguments I hear today about reversing globalization, is based on the fact that COVID showed us that self-reliance is the way. My view is that we are probably reading the wrong lesson, because if sitting in Kenya and I have relatives who are diabetic and had whatever, the very reason that they got on the line and actually received the vaccines were because global vaccine knowledge was shared, an act of globalization. Supply lines were kept open regardless of the difficulties. So I'd like to ask you, are we reading the wrong lessons? Because I fear we are. Are we reading the wrong lessons from once in a century shock, and therefore fashioning policy to respond to a very rare event, however serious it might have been? Thanks.
Thank you. Okay, maybe we'll have the last question from the lady back there. Sorry? Oh, you want to ask a question? Okay. No, you can ask since you have the mic. Sorry.
Well, more than a question is a comment, because I think that we keep gravitating. I'm Albert Soler from the World Bank. I'm resident here in Kigali, but the last 5 years I was in India. So there's a lot of comparison potential, no, between 1.4 billion market in both sides. India is a country, but still very fragmented. We from the World Bank, we even help to make like the VIT kind of like standard across the country. So, but in the end, I wanted to touch upon this issue of the political will. No, we keep talking about the AFCFTA. Maybe the reason why it's taking is moving so slowly is because we know that the trade agreements are accelerators of creative destruction, which from a macroeconomic perspective, this is the way to go. But in countries that with such a huge demographic dividend, where there's a lot of political pressures to create jobs through trade agreements, which are, again, the way to go, but we need to be ready to have winners and losers. And that it's going to make unproductive companies like go down. So maybe we have to understand that the politicians are a little bit wary in a highly unstable region to pay that price. No? So, but this is the common. I mean, the idea that came up thanks to the different conversations in this very interesting panel that we are in is like, why not taking the opportunity of COVID, food security, things that are big pressures on our heads right now, to kind of like push the envelope and use that as a landmark of collaboration and regional kind of integration, no? Because you don't have any other choice. But I am very much enjoying the debate because we keep talking about the AFCFTA as the panacea and what people should do, but then we are faced with the sad reality of the huge informality, corruption, non-trade barriers that everybody wants to be the winner in the trade agreement, no? And in the end, the trade-offs that Miriam was mentioning very wisely, I mean, or the civil society that should kind of step up and tell our politicians that this is the way to go. I mean, there's a lot of kind of moving targets here, right? So, but I don't have a question, but I wanted to.
No, thank you for the comment, and I'm happy you said you work with the World Bank. I think the World Bank works very closely with governments of in Africa, and those are some of the advice that I think through collaboration we can push to. But just to get quick reactions on the questions. I think the first question was really on whether we are retracting when it comes to globalization. I mean, is that really the story?
I think it's a very interesting perspective from Kwame, and I agree. We could be drawing a wrong lesson. And that is why when I was talking, I was saying we must have a spectrum. National sovereignty, integration on the other side. It might not be the best lesson to draw much from, but we can draw a lot from it. But we are a global village. That will not change. Even with the case of Ukraine, and you see for us and Russia, we import a lot of wheat from there. But when you go to basic economics, substitution effects are there, so that's another factor. So I think that's something we need to look at. And I know time is not on our side. Political will remains for the politicians, not for the civil society. They can be pushed, but it remains to the politicians. And the success of these policies, to me, is 95% a pure function of leadership. Thank you.
Thank you. I mean, just to also add on the political will part, I think that a lot of times Africa is seen through one lens. If you look across the continent, there is hubs for different sectors that are developing. So you look at Rwanda, the digital hub is thriving, so it means the policies around here are favorable. In Kenya as well, fintech is thriving. You look at Nigeria, agric is thriving. So if you go to Nigeria and a fintech fails there, you shouldn't classify the whole of Africa as not receptive or not being open to regulation. So for the vaccines, I would say there are countries that are really ready to open up their borders for vaccine production and stuff. So it's important to look at where the political will exists and then go there to invest. I don't know if you have any reactions to any of the questions, sorry.
So, yeah, questions are very difficult because globalization at this time, I cannot answer. There can be some destruction or if the globalization is continuing. But what I found from European case for the energy security is that European countries are looking for African countries, such as Algeria, Senegal, and even Korean government is looking for Gabon because they want to import the gas and petrol from those countries. So this can be new way of the globalization. And I think if we don't want to destruct the global world, then there might be some role for the international organizations like WTO, because WTO recently, they from the MC12 meeting, they talked about the TRIPS waiver, even though it was a bit late. But this can be one starting point of the international organization, how they can aggregate the opinions of each country.
Thank you very much. I think we've already overrun our time, so thank you very much, and open to you.